In the stock market, there are many different trade styles which you can choose from. All the way from the micro trader to the investor, there are loads of different ways that you can make money. But determining what trade style works best for you will allow you to establish what kind of results you should expect from your trading career. Let's dig a bit deeper into that concept and look at the different trading styles which most investors use. We will look at the benefits and drawbacks of each style, and then that will hopefully allow you to decide what style might work best for you. And whilst I will make a detailed video around each different trade style later in the series, this should give you some pointers and indicators as to what you should look for in common trading styles. So let's start off by outlining the main trading styles people choose. Again, there are countless different trading styles, but the most common ones usually fall into the following types: micro trading, also known as scalping, day trading, swing trading, and long-term investing. Again, other trade styles which people may choose from include high frequency trading, pairs trading, and trend following. But when trading in these above mentioned categories, most people choose to do one or both of the following: technical analysis and fundamental analysis. Now, you may or may not know what these mean, so we'll quickly go over it. Technical analysis is when a trader determines where they're going with the stock based on the charts. They usually use indicators and candlesticks to make their mind up. Alternatively, fundamental analysis can be described as judging a company's stock based on their business performance. This can include going over balance sheets, news, and other financial data. When traders want a comprehensive view, they may choose to use both of the aforementioned indicators to decide what will work best for their next move. Now, make sure to remember these terms as they will come in useful later in the video. But let's get back to the different trading styles, and we're going to start off with the micro trader. Now, the micro trader, also known as a scalper, is a trading style which specializes in profiting off very small price moves and changes, and making a fast profit off reselling. When scalping, traders may wish to be in and out of their investments within the day, sometimes even multiple times per day. As stated, traders of this style benefit from small price changes, often meaning that it requires heightened amounts of capital due to the lower margins. However, a benefit of this trading style is that there is no worries about holding overnight, as you simply don't need to do that. When trading in this style, technical analysis is likely to be the preferred method of indication, as investors look for signs within the charts to determine the correct times to enter and exit their trades. Then we have the day trader. The day trader is somewhat similar to the scalper because they wish to enter and exit their trades within the same day. However, they may hold on for longer than the scalper, but they still wish to be out before the markets close. Day traders may have potential for bigger profits than micro traders, but the consequence is that they have to hold on for longer. When in this trading style, a mix of both technical and fundamental analysis may be used to garner the best results. This is because news may come out which will influence the way that a stock can move throughout the day, and then the charts can be used to determine the best times to enter and exit the stock. A benefit of this trading style is that it removes the risk of being knocked out in the post-market or pre-market hours of trading, but it does also limit the potential for profits as you are in and out of the stock within the same day. Now we can move on to the swing trader, as the swing trader is quite different to the aforementioned trading styles. Unlike the ones spoken about this far, the trading style revolves around holding stocks for the short to mid-term. This can be from days to weeks or maybe even months. The intention of this style is to benefit from larger moves in price than the other previously mentioned methods. Swing traders will often use a combination of technical and fundamental data, allowing them to assess good entry and exit points for the stock, and that will allow them to maximize their profit potential. This may include buying into a stock when some bad news has came out and then anticipating a rise in the future based on that news and the charts and other stuff like that, but that's just one example. So whilst the potential for profit here is significantly heightened over the previous two methods, it also involves trusting in the process, and results may not be seen immediately, and some traders therefore may doubt themselves, and this can be a big flaw with swing trading, as if the stock goes down a day or two after, it may not necessarily affect the overall goal, but it will probably affect the way that people think in their minds, and obviously that may cause them to sell the stock at a loss when they simply wouldn't have had to if they had just trusted in their process. And then finally we have the long-term investor. This is the kind of person who buys stocks and holds on to them for years, maybe even decades, and doesn't focus much on the daily movement of the stock. This trader doesn't care much about the technicals of the stock, as they have already done their fundamental research, and therefore they believe in the process and are willing to hold for years and years, sometimes even decades. This type of trader will often benefit from large returns and have a steadfast mindset that they bought the right asset as far as they see it. But the downside of this is that the method takes a lot of time, arguably months if not years, potentially even decades to see huge results, but they do sure add up over time. So there you have it, a brief introduction and a gloss over some of the most popular trading styles. What trade style do you think will work best for you? Do remember though, this was intended to just be a brief introduction as to the popular methods, and we definitely didn't go over everything in this video, but it will hopefully give you an indication as to where to look, and an introduction into these concepts if you haven't already researched them yourselves. If you did learn something, don't forget to like and subscribe, but that's it for now. Thank you so much for watching.